Hi everyone, and welcome back to the channel. In our last video, we showed you the benefits of using RRSPs to lower your taxes and increase the amount of government benefits that you can qualify for. In episode 4 of our tax tips and investing series, we're taking a closer look at RRSPs to show you how RRSP limits work, what happens if you deposit more than your limit, explain why maxing out your RRSP isn't always the best choice, and we're going to go through some common mistakes to avoid when claiming your RRSP contributions on your tax return this year. Let's start by covering the basics of RRSP contribution limits and deduction limits, which are often assumed to be the same. Your RRSP contribution limit is the maximum amount that you can deposit into your RRSP, while your deduction limit is the maximum amount that you can deduct on your tax return to reduce your taxes owing. Each year that we continue to work, our contribution and deduction limits grow. For the 2022 tax year, your RRSP deduction limit is 18% of the amount of income that you earned last year, up to a maximum of $29,210. Something to keep in mind though is if you have a pension at work, this will lower your limits. Assuming that you don't have a pension and you made $45,000 last year, then your 2022 RRSP deduction limit would look like this. If you earned RRSP deduction room in previous years, any amounts you didn't use are carried forward and added to this amount, as you can see here. Now, for most of us, our contribution limit, which is the amount that we can actually deposit into our RRSP, is usually the same amount as our deduction limit, the amount we can claim on our taxes. But sometimes our contribution limit and our deduction limit can in fact be different. So how exactly does this happen? Contributing into an RRSP doesn't require you to deduct that contribution in the same tax year. In fact, sometimes it makes sense to make a deposit into your RRSP today, but claim the deduction on your taxes in a later year. Choosing to do that means your contribution limit would now be reduced, but your deduction limit would be unchanged. Undeducted contributions usually arise when we've made RRSP deposits that wouldn't have had any positive impact on our tax return. Either incomes were too low, or perhaps you had other deductions that you claimed, like tuition credits or child expenses, for example, that would have reduced your taxes owing already for you. In a lot of cases, your accountant or the software that you use to file your taxes yourself would have automatically made the decision to not deduct those RRSP contributions, and you may not have even noticed. Be careful though, not deducting your deposit doesn't mean that you don't need to declare it on your tax return. You always need to declare your RRSP contribution when you file your taxes during the corresponding tax year. This is a common mistake that will require you to go back and have to adjust your tax return. While our calendar year runs from January to December, the RRSP calendar is different. Any deposits that you made must be accounted for even if you didn't deduct them. Your notice of assessment will show you exactly how much you can deposit this year, along with any unused contributions that you may not be aware of. You can find this document online through your CRA My account. So we now understand how our limits are calculated and where to look to find out how much we can deposit and deduct, and also find some contributions that maybe we forgot about. But sometimes mistakes happen and we put more in than we should. What happens at that point? In that case, CRA will charge you a 1% monthly penalty until you take that over contribution out. You'll also need to file a special form if that happens to avoid an additional penalty. We've included a link to that form in the description below. To add a bit of a safety net, CRA has given most of us a $2,000 buffer to avoid a penalty if we overcontribute. That $2,000 buffer only applies to those of us that were 18 years of age or older in the previous tax year. Hopefully you found this video helpful. Stay tuned for our upcoming video in this series where we'll be sharing some important tax tips and updates for the new year. Thank you so much for watching, and we'll see you next time.